Imagine a world where your money works for you, generating a steady stream of income even while you sleep. That's the power of dividends. Dividends are payments made by companies to their shareholders, essentially sharing their profits with you. They're like little thank you gifts for believing in their growth. And the best part? You can use these dividends to cover your living expenses, freeing yourself from the daily grind. That's what financial freedom is all about. Dividend investing isn't about getting rich quick. It's a marathon, not a sprint. It's about building a solid foundation for your financial future, brick by brick. Think of it like planting a tree. It takes time to grow, but with patience and nurturing, it eventually bears fruit, providing you with shade and sustenance for years to come. Dividends are those fruits, the rewards of your financial discipline and smart investment choices. Now you might be thinking, dividends sound great, but are they really reliable? The answer is a resounding yes. Unlike the volatile stock market where prices can swing wildly, dividends offer a more stable and predictable income stream. Companies that pay dividends consistently are often well established and profitable, demonstrating their commitment to sharing their success with their investors. So, if you're tired of the rat race and yearn for a life of financial independence, dividends are your ticket to freedom. It's time to take control of your money and let it work for you. In the following sections, we'll explore the ins and outs of dividend investing, equipping you with the knowledge and strategies to build your own dividend-powered future. Let's break down the different types of dividends you might encounter on your investment journey. The most common type is cash dividends. It's as straightforward as it sounds. Companies directly deposit cash into your brokerage account. This is cold, hard cash you can use for anything you like, from paying bills to funding your dream vacation. Another type is stock dividends. Instead of cash, companies issue additional shares of their stock to shareholders. For example, a company might give you 1 new share for every 10 shares you already own. This increases your ownership in the company, potentially leading to even more dividends in the future. Think of it as a bonus that keeps on giving. While less common, some companies offer property dividends. This can include physical assets like real estate or commodities. It's a unique way for companies to reward shareholders, especially those operating in industries with tangible assets. Imagine receiving a piece of land or a shipment of valuable resources just for holding their stock. Remember, not all companies pay dividends. Some choose to reinvest their profits back into the business, fueling further growth. This can be a good thing, as a growing company might eventually start paying dividends or see its stock price appreciate significantly. The key is to research and understand a company's dividend policy before investing. So, how do you identify companies that pay healthy dividends? It's all about analyzing key metrics. One crucial factor is dividend yield. This measures the annual dividend payment as a percentage of the stock price. For instance, a stock priced at $100 paying a $4 annual dividend has a 4% dividend yield. A higher yield generally suggests a more generous dividend payout. Another important metric is the payout ratio. This tells you what percentage of a company's earnings is paid out as dividends. A payout ratio of 50% means the company distributes half its profits to shareholders, reinvesting the other half back into the business. A sustainable payout ratio is crucial, indicating the company can comfortably afford its dividend payments. Look for companies with a history of consistent dividend payments. Companies that have increased their dividends for several consecutive years demonstrate financial strength and commitment to rewarding shareholders. These are the stalwarts of the dividend world, the reliable giants you want on your team. Remember, past performance is not a guarantee of future results. However, a solid track record of dividend payments can be a strong indicator of a company's financial health and commitment to its investors. Combine this with a thorough understanding of the company's business model, industry, and future prospects to make informed investment decisions. Now, let's talk about building a dividend-paying portfolio that can fuel your financial freedom. The key here is diversification. Don't put all your eggs in one basket. Spread your investments across different companies and industries to mitigate risk. If one company faces headwinds, others can cushion the blow. Think of it like building a house. You wouldn't build it with just one type of material, would you? You'd use bricks, wood, concrete, and more to create a strong and resilient structure. Similarly, a diversified portfolio includes stocks from various sectors like healthcare, technology, consumer goods, and energy, ensuring you're not overly reliant on any single industry. Remember that diversification isn't just about spreading your investments across different companies, it's also about varying your dividend yields. Include companies with high yields for immediate income, and those with lower yields but higher growth potential for long-term capital appreciation. This creates a balanced portfolio that caters to both your present and future financial needs. Finally, don't forget about reinvesting your dividends. This is where the magic of compounding comes into play. By reinvesting your dividends, you buy more shares, which in turn generate more dividends, creating a snowball effect that can significantly accelerate your wealth building. It's like planting a seed that grows into a tree, producing more seeds that grow into more trees, creating a flourishing forest of financial abundance. The power of compounding dividends over time. Compounding is, well, the secret sauce of wealth building, and it works wonders with dividends. Think of it like a snowball rolling down a hill. It starts small, but as it gathers more snow, it grows larger and larger at an accelerating pace. Compounding works the same way with your investments. When you reinvest your dividends, you buy more shares, which in turn generate more dividends. These additional dividends are then reinvested, buying even more shares, and so on. This creates a virtuous cycle of growth that can significantly amplify your returns over time. The longer you stay invested, the more powerful compounding becomes. Time is your greatest ally in the world of investing. The earlier you start, the more time your money has to grow and compound, leading to exponential returns down the line. It's like planting a tree. The sooner you plant it, the taller and stronger it will grow, providing more shade and fruit in the future. Imagine investing $10,000 in a dividend-paying stock with a 5% annual yield. If you reinvest those dividends, your investment will grow to over $26,500 in 20 years and over $67,000 in 40 years. That's the power of compounding. It's a slow and steady race, but the rewards at the finish line are well worth the patience and discipline. Real-life success living off dividends. Let's look at a hypothetical example of a couple, Sarah and John, who achieved financial freedom through dividend investing. They started in their early 30s, diligently saving and investing in dividend-paying stocks. They chose companies with a solid track record of dividend payments and diversified their portfolio across different industries. They reinvested their dividends religiously, watching their portfolio grow steadily over time. By their late 40s, they had accumulated a substantial nest egg that generated enough passive income to cover their living expenses. They were no longer tethered to their jobs and could choose to pursue their passions, travel the world, or simply enjoy their newfound freedom. Sarah and John's story isn't a fairy tale. It's a testament to the power of disciplined saving, consistent investing, and the magic of compounding. They understood that financial freedom wasn't about getting rich quick, but about making consistent progress over time. Their journey was long, yet they enjoyed the fruits of their labor. Their story is an inspiration to anyone seeking financial independence. It demonstrates that dividend investing isn't just for the wealthy. It's a viable path for anyone willing to put in the effort and stay committed for the long haul. Sarah and John's success story is a beacon of hope, illuminating the path towards a brighter financial future, where work becomes a choice, not a necessity. Mistakes to avoid. Dividend investing pitfalls. While dividend investing is a powerful tool for building wealth, it's not without its pitfalls. One common mistake is chasing high dividend yields without considering the underlying company's financial health. A high dividend yield can sometimes be a red flag, indicating a company is struggling and its stock price has dropped significantly. Another mistake is neglecting diversification. Putting all your eggs in one basket, even if it's a seemingly strong company, can be risky. Diversifying across different companies and industries mitigates risk, protecting your portfolio from the downfall of any single investment. Remember, a strong and resilient portfolio is built on a foundation of diversification. Investors often fall into the trap of timing the market, trying to buy low and sell high. This is a risky game, even for seasoned professionals. Instead of trying to predict market fluctuations, focus on building a solid portfolio of dividend-paying stocks and holding them for the long term. Remember, time is your ally in the world of investing, not your enemy. Finally, avoid emotional investing. Don't let fear or greed dictate your investment decisions. Stick to your investment plan, research thoroughly before investing, and don't panic sell when the market takes a dip. Remember, the stock market is a roller coaster. It goes up and down, but over the long term, it generally trends upwards. Your dividend journey starts today. You don't need a finance degree or a fortune to start investing in dividends. The first step is to educate yourself about the basics of investing. There are numerous resources available online, in libraries and through financial advisors that can help you understand the fundamentals of dividend investing. Once you have a basic understanding, you can start small. Open a brokerage account, even with a modest amount of money, and begin investing in dividend-paying stocks. As you learn and gain experience, you can gradually increase your investment amount. Remember, every journey starts with a single step, and the journey to financial freedom is no different. Don't be afraid to seek help from financial advisors. They can provide personalized guidance based on your financial goals, risk tolerance, and investment timeline. A good financial advisor can be a valuable asset, helping you navigate the complexities of the financial world and make informed investment decisions. Remember, the key to successful dividend investing is consistency. Make regular contributions to your investment account, even if it's a small amount. Over time, these contributions will accumulate, and the power of compounding will work its magic, growing your wealth exponentially. The journey to financial freedom is about consistent progress. That is what matters the most. Final conclusion: dividends, your path to financial freedom. Dividends are more than just payments. They're a pathway to financial freedom, a way to break free from the shackles of financial dependence and live life on your own terms. They represent a share of a company's success, a reward for your belief in their growth and potential. By understanding the different types of dividends, evaluating dividend-paying stocks, and building a diversified portfolio, you can harness the power of dividends to generate a passive income stream that covers your living expenses. This frees you from the daily grind, allowing you to pursue your passions, spend time with loved ones, or simply enjoy the freedom of choice. It requires patience, discipline, and a long-term perspective, but the rewards are well worth the effort. Imagine a life where your money works for you, generating income even while you sleep. That's the power of dividends, and it's a power within your reach. Start your dividend journey today. Educate yourself, seek guidance from financial advisors, and begin investing consistently. Over time, you'll witness the magic of compounding as your wealth grows steadily, leading you towards a brighter financial future where financial freedom is not a dream, but a reality. At 15X. Now it's your turn to take the first step into financial education and subscribe to receive more related tips and information.